What if I told you that UK households could boost their state pension by over £340 a year without investing a penny or filling out endless forms? The surprising truth is that you might already qualify, and millions of people are missing out right now. Stay with me, because this simple trick could put hundreds of pounds extra in your pocket every year. Welcome to UK Insight Now, your trusted guide for pensions, benefits, and senior living in the UK. Stay informed, stay supported, and enjoy your golden years with confidence. Subscribe now and join the community. Let's break down how this works. The government has 8 specific benefits that, when claimed, count toward increasing your state pension. These benefits aren't obscure or rare. Many households already receive them. The key is understanding that each of these benefits can affect your pension entitlement if the timing and paperwork are right. The first benefit to consider is the child benefit. While it's primarily aimed at helping families with the costs of raising children, it also has an impact on your state pension record. If you or your partner claim child benefit, even for a short period, it can count toward your national insurance record, which in turn can boost your pension entitlement. Next is the carer's allowance. This is a lifeline for those who dedicate time to caring for a loved one who needs daily support. Many carers don't realize that receiving this allowance can fill gaps in your national insurance contributions. Even a few years of claiming carer's allowance could increase your future state pension, sometimes by hundreds of pounds. Income support is another key benefit. Designed to help those on low income, income support can count toward your pension record if claimed correctly. This is especially relevant for households that faced periods of unemployment or financial hardship. Ensuring that these periods are documented can make a real difference in your retirement income. Another benefit that matters is job seekers allowance. If you were actively seeking work and claiming this allowance, those months can count toward your pension. It's easy to overlook, but every contribution period adds up, and when combined with other qualifying benefits, it can push your pension entitlement over that £342 mark. Employment and support allowance is also on the list. For anyone who was unable to work due to illness or disability, claiming this benefit could fill in gaps in your national insurance record. Many people assume that missing contributions during illness would hurt their pension, but this allowance can ensure that your record stays complete. Pension credit is another crucial benefit. While it's typically associated with supplementing low retirement income, claiming pension credit can sometimes reveal additional entitlements that weren't obvious before. For households already receiving other benefits, it's worth checking whether pension credit could help maximize your state pension. Housing benefit can also play a role. While it's primarily intended to assist with rent, periods of receiving housing benefit can count toward your pension if your overall income and national insurance contributions qualify. It's one of those benefits where a little paperwork review can make a surprisingly big difference. Finally, universal credit is the umbrella benefit that combines several previous benefits, including job seekers allowance and income support. Receiving universal credit for any period may also count toward your national insurance record. Since universal credit has become more widespread in recent years, this is especially relevant for younger retirees or those who had breaks in employment during the past decade. Understanding which benefits you qualify for is only part of the picture. The next step is ensuring that your national insurance record accurately reflects these periods. The government sometimes misses periods where benefits were claimed, and this can directly impact your pension. Checking your national insurance statement regularly and reporting any discrepancies is crucial. Even missing a single qualifying year can reduce your state pension by hundreds of pounds over time. So, how do you check? The easiest way is to log into your government account online and review your state pension forecast. This will show you your current entitlement based on your recorded contributions and any gaps. From there, you can cross-reference with your benefit history to see if any periods should count but haven't yet been recorded. It's also worth speaking directly to the Department for Work and Pensions or a pension advisor if you're unsure. Many people are hesitant to ask, thinking the process is complicated or that it won't make a difference. But in reality, ensuring your record is complete is one of the simplest ways to maximize your retirement income. What's especially powerful about this approach is that it doesn't rely on changes in law, financial markets, or personal investments. It's money that you've already earned the right to. You just need to make sure the government knows about it. In many cases, households have gone years without claiming these entitlements, only to discover that they could have increased their state pension by several £100s annually. For families who have experienced financial pressure, this can be a real game changer. An extra £342 a year might not sound like a fortune, but it's the equivalent of nearly £30 per month, enough to cover essential utilities, groceries, or transportation costs. And for those who combine multiple qualifying benefits, the total boost can be even higher, giving retirees a little more financial breathing room and peace of mind. Another important point to keep in mind is timing. Benefits claimed during certain years may have different effects on your pension, depending on government rules at the time. It's not just about having received a benefit, it's about making sure it's correctly recorded in the right period. This is why reviewing historical claims and ensuring your national insurance record matches your benefit history is so critical. It's also worth noting that some benefits have conditions, and eligibility may change over time. Carer's allowance, for example, has specific requirements for who counts as a dependent needing care. Child benefit requires you to have children under a certain age. But even if you no longer receive these benefits, past claims can still impact your pension. It's never too late to review your history and ensure all qualifying periods are properly accounted for. Many households also underestimate the value of professional advice. Pension specialists and DWP advisors can help you navigate complex rules and identify periods where benefits were missed or incorrectly recorded. While some may assume this service comes at a cost, free advice is often available, and the potential increase in your pension makes it more than worth the effort. For those worried about paperwork, the process has become much easier in recent years. Digital records, online submissions, and government portals allow you to quickly check your national insurance record and cross-reference it with your benefit history. Keeping digital copies of old statements, letters, or notifications from the DWP can simplify the process and ensure nothing is overlooked. It's important to remember that claiming these benefits for pension purposes doesn't affect the benefits themselves. You're not asking for extra payments beyond what you're entitled to. You're simply ensuring that your state pension accurately reflects all qualifying periods. In many ways, it's about fairness and making sure you receive the retirement income you've already earned. Finally, spreading awareness is crucial. Many retirees, and soon-to-be retirees, simply aren't aware that these 8 benefits can impact their pension. Friends, family, or community groups can play a huge role in sharing this information. Even a small tip to check your national insurance record could result in hundreds of pounds extra per household each year. Thanks for watching UK Insight Now. Don't forget to like, subscribe, and share with other seniors who need this info. See you in the next video. Stay well, stay informed.